What's up, guys? It's Rey-Jay back with another video. And in this one, I wanted to break down something with SPY, Tesla, and the overall markets. I'm also going to break down what I do believe could end up panning out for the future and what you should be watching for confirmation to determine if the market is about to see a correction. But just note that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out my Webull link. If you deposit any amount of money, you're guaranteed 12 free stocks. If you deposit $500, you're guaranteed 20 in total. Deposit $25,000 more and you're guaranteed 75. The offer ends very soon in just about 12 days from now. Anyways, now let's talk about the market. So one thing worth mentioning is the fact that the market's on a very, very strong uptrend so far, and it's doing this despite the fact that seasonality typically suggests downside in October. Now, there's many reasons for why this is happening. Could it be that the market doesn't truly have a really, really bearish catalyst to convince it to really start tanking? Or could it also be because of, the Fed, as the Fed has been telling us that there's going to likely be a soft landing and the soft landing narrative remains? Well, there's all these different factors kind of like affecting this. So the question is, what's happening in the future and what's going on with the correction that could be coming? Is it happening soon? What do I think about this? I want to give you guys some insights about that. Let me just tell everyone this, okay? I'm not some kind of fortune teller. I don't always know what the market will do. That's why a lot of the time I talk about probability based analysis, which suggests that based off multiple factors, we could look at what's the most probable move. Now, I did suspect, I did make some predictions that the market could see a bit of a sell off right before the election, before a big rally. That's what I initially thought, but so far that has not really panned out. And instead, the market's holding up very well as a result of all these different things, from Jerome Powell pumping the markets and insinuating the fact that the economy is doing very, very well, and also because of the fact that there's a lot of shorts out there, right? A lot of people are just continuing to short the market to oblivion. If you look at the put to call ratios, they're very, very high. There's so many puts expiring again and again and again, week over week. So it's very, very crazy to see that. And that's part of why the market makers are holding things up, hurting the shorts, as everyone has been suspecting that. Typically, what happens during elections is the market sells off before the election and then we get a big rally afterwards. That's the most typical pattern, especially once we hit October, we do tend to sell off. So far, the market hasn't even started that and still continuing to hold up. So it's very, very different from what we typically see during seasonality periods. Like right here, you guys can see the market tends to sell off and then starts to rally. So that's the reason why I want to talk about a very important lesson in trading. One thing about trading you have to remember is that not everything will pan out as you predict because there could be so many unexpected factors. And we have to watch for confirmation to determine if this thing is truly going to tank. So the first thing worth mentioning is the fact that when you look at the way the market's running, we are holding up very, very well. If you were to see these levels, I want to just call this out. SPY has a tendency of loving to hold its supports. So if you look at the last couple of months, okay, if you go back to like September, SPY was riding the 20 and 50 EMAs as our supports. Notice how we were above the green line right here. We're riding this up, 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 up. Then we came down to the yellow line. This is our 50 EMA. Then we started to continue to ride these up. So I think these are very pivotal supports to watch for. SPY is so far holding the green 20 EMA. It's currently at 582. That's our main support. If that were to fail, we're looking at 578. We have to lose that first for confirmation that this is going to start turning more bearish. And we haven't closed below that yet. So the best thing to do is to be adaptive. It's like what Bruce Lee says, be like water, adjust to your base, adjust to what the market's doing. Do not just short, thinking the market's going to crash and hoping you'll get lucky and make some, big bucks out of that. That's not going to work out very well, especially when you're trading options and there's a lot of those like choppy days that just hurts premiums. So here's how I'm going to go about this. Okay. I'm done trying to predict if there's going to be some kind of crash or not. I do believe that we're going to see a corrective phase eventually. I don't know if it's going to be right after the election or if it's going to be early next year because of the recession. It's going to happen eventually. Okay. It will most likely happen. Why? Because first off, SPY still has this gap down here at 565. We also have these gaps to fill. There's one down at 559. And then there's also one in the 530s. All the way down here, we have a big gap to fill at 534. I do believe SPY will come down to fill these gaps eventually. We will likely come down. The rising wedge-like structure is also, and technically it is still valid. So that could once again lead to that big sell-off, but there's no sign of it quite yet. Now, another factor worth mentioning is the fact that the VIX is entering these cyclical periods, which do tend to lead to more upside for it. But we're waiting to see if we get an official breakout. So if the VIX officially breaks past 23, we have a massive gap to fill at 36 on the VIX, which would take this back to the very close to 40 area. Okay, so there's this big gap right here on the VIX. Right over here, we have a gap to fill at 36. The VIX is eventually going to get a breakout as well. So this suggests that most likely there's going to be a correction that's coming. There's going to be another one, guys. The VIX is going to hit the 40s. SPY is going to, tank to at least the 550s to fill those gaps, if not the 530s to fill that other gap. We're going to get a correction, guys. But I don't know exactly when it's going to come, in all honesty. I can't solely depend on cycles. I would say this: we have to just wait for confirmation because they could be artificially holding the market up approaching the election. And for me to turn bearish, I need to see us lose our 50 EMA at the very least. 578 has not broken on SPY. We're holding support nicely, and the chart looks more bullish. Going into next week, we look more bullish. It looks like SPY is going to be pushing closer to, the all-time high all over again. So the bulls have a bigger edge. But there's no sign yet of us getting that correction. Do I think the correction is going to come? Yes, I think we're going to get a correction. I don't know if it's going to be after the election. I don't know if it's going to be closer to like early next year because of the recession. I don't know which one it's going to be. It's going to be one of those two most likely. But don't turn too bearish just yet. We need to wait and see if we lose these supports to start turning bearish. We haven't done that yet. So as of right now, we remain more bullish. I hope that's as clear as possible. The correction is coming, but there's no sign yet of it starting. It's going to take even longer. They could be manipulating the market because of the election, so you have to give this more time. As for the QQQ, one of the things I called out is the fact that we have this very, very pivotal ascending wedge like structure that remains intact. So we have to see if this will continue or not. I want to mention that this is developing very, very nicely so far. And we have made very, very nice attempts to fill these gaps above. Now, could the QQQ continue this rally and try to push higher and higher to try to get to these highs? It's possible. It's possible. But notice that just like SPY, it's holding its 20 and 50 EMAs. So the QQQ is holding its green 20 EMA very nicely here. It held its 50 EMA, the yellow line. It held the yellow line again, and it's forming a wedge. So right now, we're uptrending. Right now, the chart is holding its EMAs, so it remains more bullish. Until we officially lose the 490 area, if not 488, until that happens, the chart remains bullish. Could we push higher? Yes, we could. We could attempt to get to those highs all over again. And it's very likely we're going to be doing that. But when the time finally comes, it's very possible that we will eventually see this pan out where we get that corrective phase. The rising wedge could continue. Maybe it continues into the election. I don't know when we're going to be forming our top, but eventually there's going to be a top that forms, and this will be looking for that corrective phase back down to these lower levels, right? That's going to be very, very probable as well. How low will we go? Well, it depends, right? You could draw a trend line like this to kind of like read this. This is going to be one support that's worth watching to see if this is where we end up dipping towards. That would take us all the way down to like the 480s. Then we also have the previous high right here acting as support at 485. If all of those break, I would be looking for basically our 200 EMA, followed by this support right over here in the 461 area. So those are going to be some levels to watch from the QQQ. Once again, I'm not worried about that yet until we start the correction. Right now, there's no sign of the correction starting, so I can't turn into a perma bear. Same thing could be said about ES for those who are interested in trading futures. We still have this giant gap over here. We have this gap at 56.37 that's going to likely get filled. I think I saw another one. I could be wrong about that, but there's basically gaps to fill on ES. This will easily drop quite a bit, another 300 points easily, if not lower, but there's no sign yet. So will it be a post-election sell-off? Maybe. Or is it going to be a sell-off because of the recession coming early next year? It could also be that. Okay, it's going to be one of those two. I don't know which one it's going to be, but we have to wait and see if the 50 EMA breaks at 58.60 to turn bearish. So this is the adjustment I want to make. I do want to say that I can't always predict everything that's going to happen, and sometimes predictions could be incorrect. So the best thing we could do is just adjust and admit the fact that we could be wrong. I could be wrong sometimes, guys. I admit that. But I'm here to improve no matter what. And I just want to make this adjustment that we need to wait and see for confirmation to turn more bearish. Otherwise, the market remains bearish as is. All right, so I hope that's as clear as possible. The market is rallying. SPY is going to be breaking all-time highs again, most likely. There is a triple bearish divergence developing. We do have a rising wedge. And that suggests that there could be some downside coming. Maybe, right after the election, maybe next year. There's going to be some kind of corrective phase, most likely. But there's no sign yet, so the charts remain bullish, and we just have to give this the time it needs. All right? So that's all I want everyone to focus on, the 50 EMAs. Do we lose those on SPY, the QQQ, and the others? We'll just have to wait and see. With that being said, I thank you all so much for listening. Have a great day, and peace out.